Friends.net. Today's Friday, the 5th of November, and we had another strong week for the markets. The S&P gained 2%, NASDAQ 3%, Russell 2000 6%, semis 8%. Just an incredible week. Biotechs were down. Should have colored that red, but let's take a look at the charts. The S&P, of course, is at an all-time high and continues to get extended. There's no such thing as up too much when there's still buyers out there, and the buyers were persistent this week. Monday we were a little bit shaky, but then we got back above that week-to-date volume-weighted average price and maintained above there. Next week, if we pull back down in towards this trend line that I have drawn off there, as well as the 5-day moving average, that would be your first level of interest. And again, we're getting extended, but it doesn't mean the market can't continue higher. The NASDAQ, as noted, had a strong week as well. This market just continues to get extended away from that breakout level, leaving a nice cushion that if it does pull back, let's say, and this isn't a prediction, I'm just trying to make a point that we're so far away from that breakout point that if we're to pull back down there, it in my mind increases the likelihood that this prior little resistance will in fact become support on a pullback, because it's got the opportunity to come down pretty hard to that level, and I think we would exhaust the selling if that were to happen. But for now, we of course remain in a powerful uptrend. We're above that rising 5-day moving average, and as I emphasized last week, as long as we're above the rising 5-day moving average, it's innocent till proven guilty. It's foolish to try to make short sales unless you're trading off 1-minute charts just intraday. The Russell 2000, I mentioned that I was done trading the Russell 2000, but instead, of course, I'm focused on the individual names. For those of you who are long the Russell 2000, congratulations. It's a nice breakout so far, and hopefully it will continue to do that and add to its gains. I think it's highly likely in this market as well that now this band of prior resistance will become support if we pull back down towards that level. If we do something like this, I think it would bounce. Hopefully we can get a little bit more extended away from that breakout point, similar to what we have in the NASDAQ, in that it would become higher likelihood of becoming support if it pulls back. So all lights are green basically for the broad indices, and we've got some incredible action in the individual names. Tesla again had a strong week here, unbelievably, that it continues to go higher like that. But the path of least resistance is higher. You can't fight it unless you want to lose your money. The semiconductors, again, big week here. What did I say, 7% or so? Breaking past that prior little area of resistance and just continuing to torch the short sellers is what's going on in there. The intraday time frames, that is a 15-minute time frame here. Here's our week to date volume weighted average price. You can see where we started on Monday, and this market never went below the volume weighted average price for the week. Just an incredible, powerful uptrend. It's getting extended. It could pull back, but it's a pullback within a primary bull market if it does. Biotechs made it right up to that declining 50-day moving average and then got smashed. So, again, there's no reason to be buying an inferior market like this when there's so much strength everywhere else, that to waste your time with downtrends. Again, a declining 50-day moving average on the daily time frame tells me guilty till proven innocent. It's not always going to be this perfect, but we saw a perfect failure right at that declining 50-day moving average. So a declining 50-day moving average in my mind says stay away on the long side. The financials settled down a little bit, but nothing bearish here. We, the volume weighted average price from that prior low, we did hold for the week. We're below declining 5-day moving average. And I don't view that as bearish. I view it as more neutral in the intermediate term. Maybe we pull back a little bit further, but the powerful daily uptrend takes precedence here, that I wouldn't short it because it's below a declining 5-day moving average, not when we have this powerful uptrend. Instead, it's kind of avoid and wait for a long setup on the shorter term time frame to get back in alignment with that longer term powerful uptrend. Energy names, still holding above that prior band of resistance and that rising 20-day moving average. They're just kind of settling down in here, but the key level is 57. As long as we continue to hold above that on a closing basis, I think you give the benefit of the doubt to the energy names. As far as crypto goes, this, the volume weighted average price from the inception of this crypto fund continues to be what halts this market. And I think in order for Bitcoin itself to get back up, it's kind of taking a lead from the this ProShares ETF. That it's, as I've been saying, I think it's kind of a case of the tail wagging the dog here. Here's actually the Bitcoin itself. It's still holding up well, but it's having trouble with the volume weighted average price from that. And if we can't get back above there soon, it increases the likelihood that we might see a little bit of a shakeout in Bitcoin down towards this volume weighted average price from the prior low. That would be bringing it down towards 57 or so. So just don't be complacent if you're a trader. Be aware that this is kind of the key, I think, to it moving back up. That's the key of what's going to take it to get Bitcoin bullish again here in the intermediate term. Meanwhile, it's just it's just kind of settling down. It's still obviously in a huge uptrend, and there's nothing to suggest that the trend is in danger. Some of the names I mentioned last week, SGH turned out to be a nice one. I had mentioned that in the video last week, and I forgot what some of the other ones were, but if you follow me on Twitter, I had outlined this shares of Lucid pretty clear, very clearly, in fact, that I had shown where I had gotten involved on Thursday based on, it gapped up on Thursday. I was looking to buy it above this volume weighted average, or was it this one? I'm sorry. So let's actually look at a 15-minute time frame. So the volume, this volume weighted average price off the peak is what I was looking at. And then on Thursday, what we saw was the stock gapped higher. Let's just clear this up, and I will show you here. The stock gapped higher, and I don't chase those gaps. Instead, I wait for it to get back above the VWAP and then a stop below the low of the day. Today, I had sold a third of it based on what I call my 2-minute exit. Once it gets extended beyond daily R2, if it makes a new 2-minute low, I sold my first third there. And now Lucid is very nicely higher here after a purchase at 36.85. It's moving nicely, and for another one that I had mentioned recently on Twitter was Plan, and I said it's my plan to keep an eye on this one. I hadn't purchased it because it's been below the declining 5-day moving average. Today I was looking at buying it above Thursday's high, but instead what happened? It gapped up. So again, don't chase the gap, wait for it to come back above the volume weighted average price. Instead, we saw it gapped up, it ran a little bit. What I would have been looking for is something along the lines of this. If it had done something like this, then that volume weighted average price would have flattened out. I would have gotten involved over here with a stop below the low of the day. Instead, it gapped up, it ran a little bit, got below the volume weighted average price and completely failed. So that's a situation of waiting for the volume weighted average price on the short term, intraday daily basis, that it saved a good loss, avoided a good loss. If you're watching this on YouTube, please give it a thumbs up and subscribe, and thanks for tuning in. Have a good weekend.